Hi, you got Shawn Wolfswinkel here with Texas Turnkey Properties and Real Property Management. And I have a special guest today. I want to talk to Graham Parham with Highland Residential Mortgage. How are you, Graham?
I'm great, Shawn. And about yourself?
Pretty good, thank you. I appreciate you taking the time out of your, busy day of golfing and spending the day with us today. But I'm just kidding. Graham and I always have a good banter with each other.
I sold my Lexus and I went and bought a golf cart. Can you believe
that? Graham's living the life we all wish we could. So, but today Graham has some really cool programs that I wanted to highlight to you guys because I know we get asked a lot, like, hey, we have equity in our properties, we have equity in our rental properties, and we would like to tap some of that, but obviously rates have gone up so much. We want to continue to purchase properties. But I think there's some limitations. And so Graham had come out with some new programs, or his company, and I wanted to talk about those. But Graham, first, for the listeners that don't know you, can you just tell us a little bit about yourself and your background?
Let's see. I've been in the business for about 25 years. I think they ranked me up in the top tier of the production. I started focusing on investment properties probably back 2003 or 2002, and I tried to run from it after 2008, and they sucked me back into it again. And so it's been a fun ride. We finally expanded out across the country. It's been a fun ride because we always deal with professionals on the investment side versus the primary residents with the first-time home buyer that are rubbing pennies together to get to the table. That's not the investors that you and I work with, Shawn. So it's been very pleasant to work with professionals. And I'm an investor myself. Shawn convinced me to buy a couple of properties down there with him, and we still have them, and they're still standing. I forgot.
Biggest regret of my life. Every time there's a problem, I get a phone call right away. I'm just joking. There's no problems, right?
I can only assume I didn't get a phone call, so my house is still good after your last storm. So I'm pleased with that. Joni does a great job at managing, which is great. But yeah, my background is strictly working with investors. I am an investor. Been at it for 18 years now. I'm not up quite to the inventory that you may have, Shawn, but I think I'm getting, the key is the more the merrier. So I'm trying to get up to about 50 for right now for this year, and we'll see what happens next year. So, but we did launch this program, which everybody's been begging for quite some time, investor HELOCs. Now, HELOCs, any savvy investor out there already knows that if, they live in California, wherever the case may be, with all this huge amounts of equity in their property, they're going to do one of two things. They're going to refinance it on a first lien basis, or going to leave that particular loan in place, and they're going to do a second lien HELOC. Now, the HELOC is called a home equity line of credit. It's basically like saying, okay, here's a checkbook. If you want to strike, $20,000 check, we'll do so. You add $20,000 to the balance. The interest on that particular balance starts to tick, and you only have to pay interest on that, okay? The way it works is there's a minimum amount for the loan amounts on the HELOCs, which is $50,000. So I'm going to paint a scenario here. Let's say you have a property that's worth let's say $300,000, and you want to do a $50,000 HELOC, okay? Well, the first lien cannot be any more than 160. Which means that gives you a 70% total loan to value. First lien and the second lien together cannot be any greater than 70% loan to value. So keep that in mind when you're looking at your inventory and you say, okay, do I have any candidates for this HELOC? Okay, and that's the exercise you go through. And there's some HELOCs. We just locked and loaded 3 yesterday on a guy that had, I think he had 8 or 9 properties. And he had some pretty good rates, some of those old COVID rates on some of the properties. So those really, we went with the HELOCs on those, but some other properties that had a little bit higher rate, the HELOC wasn't to their advantage, so we just went on a first lien basis. So the HELOC is a working tool, okay? I had it on my last primary residence. As an example, Shawn comes to me today, said, Graham, I got a heck of a deal down here. I haven't shown it to anybody, and here's the, you want to buy it. And I'm kind of going, well, I'm a little short this week, Shawn, but I can go tap into my HELOC. Now, the good news is, guys, HELOCs is like your money. It's your equity. So if you want to do a HELOC on whatever property you want to do and take that money and go buy another property, you can do so in accordance to Fannie Mae because that's your money. It's not gift. It's not borrowing against a credit card or anything other than your equity. So keep that in mind. So that's why it's called a home equity line of credit. Now we do have HELOCs. I'm not going to talk much about it, but in Texas, it's a pretty popular tool for people that are buying their primary residence where they want to avoid private mortgage insurance. So that to avoid private mortgage insurance, you have to keep the first lien no greater than 80%. So you just backfill like a 15% loan. Now you're at 95% loan to value, and the borrower brings 5% to the table. They do a lot of that in Texas on for purchase transaction. I don't recommend a standalone HELOC for anybody that has an investment property that's free and clear. Your best bet is to go with the regular 30-year fixed rate. Okay. Now, some of the features of this product, it has a 3-year draw. Okay. Let's say we're doing a 50,000. 50,000 is the minimum amount. On the initial draw, you do have to take the full draw for 3 months. After 3 months, you can pay it off, pay half, whatever you want to do. You have 3 years of check writing ability during those 3 years. Anything you put on the line, well, let's just call it 50,000. Well, whatever the rate is at the time, well, it's going to be factored against the 50,000, and that's going to be your payment. And it's on a 30-year amortization, and it is interest only. Okay, loan amounts can go up to $500,000, and the minimum credit score is 680. Okay, this is available on 1 to 4 units. There is no prepayment penalty. Let's see here. Great thing, if you have a condo, there's no HOA certificate. You don't need any cash reserves. And the cool thing about the appraisal process is once we plug thing into the system, let's say, okay, we need $300,000 value, $160,000 on the first lien and $50,000 on the second. We got a 70% loan to value. The system will go in. It'll talk to, for lack of better words, like a Fannie Mae system. It says, Fannie Mae, what do you think the value of this property is? If it comes back 300 or better, we're good to go. So there's no appraisal fee. So you get 3 shots at it. You take the AVM first, and if that doesn't work, then we have an appraiser go do a drive-by, okay? And if that doesn't work, then of course we'll pay for a full-blown appraisal to see if, in fact, that we can achieve those values that we're looking to do, okay? No more than 20 acres. I know we got a lot of acres there in Texas, so no more than 20 acres. It is a fully documented loan. And here's the keys you might want to consider. If you think about Fannie Mae and think about those folks that have been inside the Fannie Mae box and now they're outside the Fannie Mae box, you know what I'm talking about, which means you have more than 10 loans on your belt, okay? So you have to have less than 10 loans on your belt. And each of these loans that are piggybacking the first lien does not count as another loan against you. It just counts as another financed property, okay? The debt to income ratio can actually go up to 50. I think they prefer to keep it around 43, but they can go up to 50% back end ratio. There is no prepayment penalty. Let's see, if you do have an appraisal that let's say you went someplace else, try to get a cash out, didn't work, something that fell through or whatever, and you send me that appraisal, if everybody likes the appraisal, we'll use it, even if it's less than 12 months old, okay? Let's see here.
I think this is awesome, and I appreciate you doing this today, and I think there's a ton of people that can take advantage of that or has been looking for a product like this. A couple questions I had. Is this, I know our clients are mainly in Houston and Albuquerque. Is this available in all states that you loan originate in?
It is available in all states except for Tennessee.
Tennessee.
Okay. For some reason, I don't know why Tennessee. You would think that they would be penalizing Texas before Tennessee because of our home laws, but no, it's no problem.
And I know this is not a fixed. It's going to vary and all that depending on the day you lock. I'm assuming, and it's locked, right?
Yeah, so let's talk about that. Yeah, there's a index and a margin.
Okay.
The index is prime. Prime's sitting right at 8.5%. Okay. The margin is 1.7 or 1.75. Let's just call it you're now at 10.5 on the rate. If the prime goes down, which we all know it will, because the feds are starting to get the itch, should we maybe do a rate cut? We don't know when, but we know when next year comes around, we're probably going to see several rate cuts. So when that happens, the prime is going to come back down. If you have so much on that line that you're paying, say, 10.5%, now you're paying less than that, and it continues to go down. The product itself, once again, it has a 3-year draw. It's 10 years of interest only on a 30-year amortization. So at the end of the 10 years, you would have to pay principal and interest. But quite frankly, if you have a 3-year draw and you're up at the 3 years, shut it down and go get another one. That's the way I look at it. And these things are very rare because everybody can get a HELOC on their primary residence. I mean, credit unions, small banks, everybody does HELOCs on their private residence. It's a little more challenging in Texas, but everybody's doing them, okay? But on the investment properties, hardly anybody's doing them. That's why we're not doing this today.
Awesome. And so, yes, so they can draw on it for up to 3 years. After that, and it's interest only up to 10 years, and then it turns into you start paying the principal. Yeah. The rate, or is the margin different for second versus first position? I'm assuming. Yeah.
Correct. It's let's just call it primary residence. It's a 1-point margin. Let's call the secondary. Let's call it 1.25 margin, and then let's call the investment, say, 1.75 margin, and that's pretty good because it was at 3 points, and now it's come down quite a bit.
And they do have to, when they initially get the loan, they have to at least take, say they qualify for $200,000. Do they have to get that full 200 for 3 months, or can they just take a 50,000 and then draw more?
Great question.
Yeah.
If you did a 50,000, your 50,000 is your minimum loan amount. It's also your minimum required draw. Okay. If you do a $200,000 HELOC, we take half of whatever that, in this case, it'd be 100,000 or 50, whichever is greater. Okay. So they keep the 100 on the line for 3 months, and then they can pay it off.
Okay.
That's how the lender.
I lost you there for a minute, but the other question I had for you was, talk a little bit to how will this affect them? Say they wanted to use this HELOC on a couple of their properties, but then to go buy more property. Anything that, I think you've touched a little bit on it, but how will this hurt them, or anything that's going to change for them as far as them qualifying for additional properties?
Good point.
Yeah.
And I've always said, on a regular first lien basis loan for an investment properties, if I can approve you for one, I can approve you for 10, because they all have income coming in. They're offsetting the liabilities. Now, this is a little different. You already have income coming in on your property. Your first lien payment is this. Now you're adding a second lien payment. So those will go against your ratios as far as qualifying on Fannie Mae and Freddie Mac. Okay.
And minimum still 680 credit score or higher for the borrower?
680 is minimum credit.
All right. Now talk a little bit about HELOCs in Texas, because I know Texas is really weird, right, about it all. Can you speak to all that? Especially, and what about on a primary? Because I know some people that was looking to, they don't want to get rid of their 3% interest rate, but they want to tap some of their equity. And in Texas, it's really difficult, correct? Or am I wrong?
Correct. First of all, let's say in Texas, you went out and did a HELOC back during, not a HELOC, a regular cash out loan, first lien basis for your primary residence back during COVID. You got a smoking hot rate, like you say, 3%. Two things you concerned yourself is, A, do I want to pay off that 3% and do another first, keep the 3% in place and go do a HELOC, okay? If that loan itself was a cash out in Texas, which we refer to as an A6 cash out, you cannot do an equity loan on top of an equity loan. Okay, if you just bought the property and you have a first lien basis at the 3%, and it's not an equity loan on top of that, Okay, so that's very important in Texas. Texas is the only state like that.
And does that apply as also to, say they already did a cash out refinance on their, does that matter for an investment property?
It doesn't matter on investment properties. It only focuses on the primary residence when it comes to those limitations.
Gotcha.
Because it's not an A6 cash out. It's just a regular cash out.
Cash out. That makes a lot of sense. And it's a line of credit. So for that 3-year period, they can, after 3 months, they can pay it off, and then it can just sit there. Then a year from now, when they find the right property, or maybe rates drop, and they can use it as their down payment, right? As well. I guess that was the next one.
Yeah, I use it as a working tool.
Yeah.
Like you say, you came to me, I didn't have any coin at the bank at the time. I stroke a check for my HELOC. We closed on the loan, and eventually start getting some income coming in. We're starting to pay that loan back off and do it all over again.
Okay. And it can qualify as your down payment that you're going to use for the purchase of a new property.
Correct.
Yeah.
Correct. We will give full credit on that.
Okay. Awesome. Well, I think, we're going to be able to send a lot of people your way that are, I mean, the rate, of course, they're not going to, and then what's your opinion on that? How have you seen investors respond to, they're probably seeing the rate, right? Or where it's right now, if it's 8.5 prime and a whatever, 1.75, the 10 and something, are they balking at that, or they're saying, hey, at least I can establish it now, and then, see what happens maybe in 6 months from now, and then be ready to buy? Or what's going on with
Well, it differs from one individual to the next. What I personally do with them, I said, okay, let's look at the property or properties, depending on how many you have, and let's pick and choose the ones that make sense. Okay. Can I get a 70% combined loan to value on this property, taking 50,000 or more or less, whatever? And then, if that makes sense, even at the 10.5%, who cares? It boils down to, do you want the money now or do you want to wait? Okay. I suspect, being that these second lien or these HELOCs for investment properties that are now out, that have not been out, I don't know how long they're going to stay out. Okay. Which means if you can grab one today, even if you don't use it, at least you have it available for you.
That was my next question. Yeah, was it in because you have 30 years or more of experience in this industry, do these programs like this come and go? Is that?
In my opinion, I think they will.
Yeah, so if you are looking, or you're looking to tap your equity, now is the time to do it. Graham's the guy to work with. He's always been a great, trusted partnership with us, and we appreciate all he does for our clients. And we know that if we send them to Graham and his team, that they're going to take really good care of you. And so we appreciate all that you've done, Graham, over the years. And I always get wonderful feedback on your guys' customer service and response. And so I appreciate you guys working with all our clients over the years. Yeah. So,
well, it's always a pleasure working with you and Joni.
I appreciate it. So again, if you need more information, we are going to share some of the flyers and information about this program in our below in the newsletter. So please click on that. All of Graham's information will also be below, so you can reach out to him and speak to him directly and go over your particular needs and your rental properties. But I think, Graham, you're going to help a lot of people buy some more property and keep building their investment portfolio. So thanks for sharing with us today, and thanks for all you do for our clients.